It's Elmer Feenstra, ING Bank. I've got a question on Delphine, for she has referring to increasing LTVs of over 80%, and indeed in Germany we have seen 85 and more. But would you recommend your client to have an 80% leverage on a project? For obviously on a core asset, the LTV is constrained by the available cash flow, so it must be a secondary office or retail or logistics portfolio, or as the Blackstones do, they just do the maths, and if things go wrong, they can easily turn into equity. But so my question is, wouldn't you only advise your clients at such a high LTV for the opportunistic investments? People buy and there is a clear exit in 3 or 4 years? Or would you also advise such a leverage for the longer term, for the keep and hold investors?
You know, we are not powerful enough to advise clients if they need, well, if they want to have a high leverage. This is something we are going to discuss. Of course, they know the risk, so we share some views, but so I mean, we have been seeing some very core transaction with very high leverage. I mean, in Champs-Élysées or in Cannes for the account of Tor Equities, because they had very little. I mean, there are still some investors active in the market with very little equities. So it's a question of. But I mean, for US investors, I mean, to get 40 or 50% LTV is not an option. It's not an option. I mean, this is not our role to say if this is dangerous or not. I mean, this is what it is.